Again, my name is Jason Levitt. It's good to be back at the Money Show. I've spoken at a few other in-person shows in New York and Vegas, and I've done a handful of these online webinars, so I appreciate the invite to have me back. As you just found out, I'm the founder and head of research at LevittBrothers.com, which is a boutique research firm that offers market analysis and trading ideas to the financial community. We've been in business since 2002. So we must be doing something right. You don't thrive in this industry for that long unless you know what you're doing. I'm also the creator of two different courses. One is a complete masterclass that teaches all the hardcore mechanics of trading, and the second is an audio course which delves into the intangibles of trading. You can see my contact info on the screen if you want to email me or reach out on Twitter. So today's talk is going to be part one of a two-part talk. I'll be discussing how I use RSI, MACD, and Stochastic to identify trades. So this makes the talk somewhat personal. I can do an entire hour-long talk on each indicator, which is what I do in the masterclass, but we have obviously a time constraint to deal with. So today I'm just going to talk specifically about how I use them. In part two, which will be in September, I don't have an exact date yet, I'll be talking about how I manage trades. Okay, so part one today is how I identify trades using these indicators. Part two is about how I manage them. My goal here isn't to convince you that what I do is the best and you should just drop everything and copy me. Instead, it's just to show you what works for me. And if you can grab a nugget or two, I'll consider this a success. In fact, if you disagree with 95% of what I talk about and there's just a single nugget that turns on a light bulb, that nugget can change your life, okay? So I'm not looking to get complete buy-in about everything, but if there's one or two things in here that kind of turn something on, then I'll consider it a success. All right, so let's get started. Several years ago, I was a guest on the Chat with Traders podcast. You can see here, it's had over 200,000 views over the last 8 years. It's one of their most popular episodes. In the show, I talk about common traits of $1 million traders. I don't know. Maybe that's why it was so popular. I don't know. So the number one trait, and this isn't what the talk is about, but I want to mention this before I start. The number one trait of all of successful traders is they specialize in doing one thing very well. Okay, there are lots of ways to trade. Okay, stocks, bonds, futures, currencies, forex, long-term, short-term. You could be someone who plays momentum, buys breakouts, buys dips, tries to trade a directional move. You could be someone who sells high within a range and covers low, and buys low within a range and covers high. And again, lots of different time frames, lots of different indicators, lots of different ways to operate in the market. The best traders have found a trade that works, one that jives with their personality, and they just do that one thing over and over and over. Okay? So my goal is to just show you how I operate, and maybe there's a nugget or two that you can grab hold of. Okay? I'm going to go through each indicator individually. First the RSI, then MACD, then Stochastic, and then I'll bring them together and show a bunch of examples. Now, as I said, I can do an entire webinar on each indicator, what it is, how it's calculated, all that stuff, but we're limited with time here. So I'm just going to jump right in, give a brief overview, and then I'm going to teach by showing examples. All right, here we go. So here is a stock chart with RSI. Okay, so RSI down here at the bottom. I use a setting of RSI 12. The default setting on most platforms is going to be 14. I use 12 simply because it was introduced to me a while ago. I liked it. It worked for me, so I just stuck with it. Whether you use 12 or 14 probably doesn't matter. What matters is if you have some seat time with it and learn the little nuances of it. Okay, so here's the RSI. It's a single line, moves up and down. It can't go below 0. It can't go above 100. 70 is considered to be overbought. 30 is considered to be oversold. And then there's a 50 level in the middle, which the RSI can sometimes dance around, find support, find resistance. Now, there are many different usages of the RSI. Obviously, I can't go through all of them. You can play divergences. There are, when it comes out of overbought area, when it drops out of when it falls out of overbought area, or comes out of an oversold area, or when it gets rejected by a certain level. You can also draw trend lines and such. Lots of different ways. So I'm just going to go through how I trade with it, and maybe you can grab a nugget or two. So here we have HUT. This is a 60-minute chart. Okay, you can see here the stock moved up, consolidated in a downsloping channel, and then broke out, moved up pretty strong. Clicked into new high here. Then it pulled back. Okay, during the pullback is not a big deal. It's just it's a strong stock. It's trending up. It pulls back within an uptrend. But what I want to focus on is what happens after the pullback. So notice that during the uptrend over here, the RSI got into overbought territory, which is very good. Okay, it could stay overbought for a really long time. It's a signal that the stock is really strong. But then over here, it falls out of overbought territory, which again is fine. Okay, so stock comes down, tests the 50-day moving average, which is the blue line here, and then it rallies again. It rallies pretty darn close to the previous high. But notice what happens to the RSI. The RSI moves up, and then it just channels or flags sideways. Okay, it refuses to go higher. This is a tell that the indicator is rejecting the attempt to move higher. Okay, stock moves up, moves down, moves up. The RSI moved down, and then instead of moving back up into overbought territory over here, which would have been very bullish, it refused to move up. So it was rejecting the advance in price, and it gives a warning that it doesn't believe it, it doesn't trust it, it doesn't think the price is going to go higher. The RSI is telling us it's probably not going to go higher. And as you can see, the RSI broke down from this flag pattern, and the stock did the same thing. So this is one of the ways I use this. I use this both in uptrends and downtrends to tell me that a reversal is going to happen. In this case, we have a double top because the RSI refused to match the previous high, or at least get pretty close to it. Okay, next example. Here is Mara. This is also a 60-minute chart. Okay, stock was basing here, moved up, printed new high, really high prints here with the RSI. Then the stock falls. It doesn't fall that much. It only falls to its 21, and the RSI drops down to here, okay, which is not a big deal. But notice that on this bounce, which is a decent bounce, RSI barely budged to the upside. Then it legged down again. Then the stock actually spent like almost 2 weeks trying to bounce again, and the RSI puts in a lower high. Okay, then we have a leg down, matches the low, and then there's an attempt to rally again, and again the RSI refuses to move up. Okay, so when the stock tries to bounce and the RSI instead just like flags or channels sideways, that is a warning that the indicator is rejecting what the stock is trying to do. The stock is trying to move higher. Several times it tried to move higher, and each time the RSI told us, no, it's just not going to happen. And then you can see what happened. The RSI broke down, stock broke down, and you can see what happened. The stock, did pretty poorly. Okay, so the RSI kind of gives us a glimpse of what's going on beneath the surface. Okay, RSI stands for Relative Strength Index. It's not relative to an index or another stock or something like that. It's relative to itself. It tells us how strong the stock is relative to itself. So when the RSI is trending down like that and refusing to go higher, it's telling us that internally the stock is starting to weaken. All right, here's another example. Here's Nvidia. Okay, stock actually based over here, doing really well. You can see it just kind of broke out here, trended up. New high over here in mid-June. You can draw a trend line support over here at the RSI. So then the stock breaks down, the gap's up here, and it falls pretty hard over the course of a couple of days. That's perfectly fine. Strong stock, trending up, uptrend. It's allowed to fall back and do some backing and filling. Okay, when it does that, you can see that the RSI broke down here. Then the stock does a little double bottom. Okay, here's one bottom, bounces, two bottoms, second bottom, and then it tries to rally. But notice what happened to the RSI. Okay, it moved up a little bit, but not much. It pretty much just kind of flagged and then broke down. Okay, so the stock double bottomed and tried to move up. The RSI told us, no, not going to happen. The stock isn't that strong anymore. It's probably not going to go that far or last that long. And sure enough, stock topped, moved down a little bit. The RSI broke down, as you can see, and then the stock followed along. Okay, so the RSI tells us, like, should we trust this move? Should we trust this rally? Okay, now you could use that to go short, certainly, but you can also use it to warn you to get out of a long, because this is a strong stock that moved up, did a little double bottom here at the 21 and then moved up again. This is definitely buyable. Okay, with strong stock in an uptrend does a double bottom at a moving average, like that's buyable. But the fact that the RSI refused to move higher was a warning that this wasn't going to last that long, and we should probably keep a tight stop on it. Okay, it's definitely still playable, but we got to take what the market gives us, and in this case, it gave us a decent 10-point move, but not anymore. All right, let's look at another example. Here is the triple Qs. This is a 2-hour chart. These charts are different time frames because the usage of this works on all time frames. There are little nuances that are different, but you can still use it on all time frames. I'll sometimes day trade on a 5-minute chart, and I'll use little things that I find out that I'll use little clues that I get from the RSI. So here's the Qs moved up, consolidate for a couple weeks, broke out to a new high, then it fell hard. So when it fell hard, it came out of an overbought area. Then there was an attempt to move higher here. Okay, but notice the attempt to move higher, we have the RSI just moved sideways. It moved off a low, but then it just flagged sideways. Okay, so the RSI was telling us, I don't trust this move. Okay, the Qs were doing great. They moved up, they moved down, they tried to move up again, and the RSI was telling us, I don't trust this move. Keep your stops really tight. It's probably not going to last. Okay, little hints. These are little hints that I get from the RSI. All right, let's move on to MACD, and then we'll just keep going with that. All right. So here's MACD, another stock chart with with an indicator on the bottom. The MACD really quickly is this black line. First of all, the settings are 12.26.9. Okay, those are the default settings on pretty much all charting platforms. So the black line here is the MACD line. It is the difference between the 12 moving average and the 26 moving average. Okay, so when a stock is moving up with a little bit of energy and the shorter term moving average is moving up faster than the longer term moving average, the gap between them is getting bigger and bigger, so the black line will trend higher and higher. And then obviously as the stock slows down, then the gap between them narrows and it narrows. And then the red line is the moving average of the black line. Okay, so here's how I use this. And again, there's a lot of different ways to use it. The MACD could like cross down, it can cross up. There are divergences, lots of different ways. I can't go through all of them. I do that in the masterclass, but I'm going to go through how I use it. Okay, this is the 2-hour chart. So AMD trends up here, and you'll notice that we got higher highs, but we got a negative divergence here that warns us that upside energy is starting to decline. We get a decline here, okay, which is not a big deal. It's a very normal pullback within an uptrend, and the MACD crosses down. Now that by itself is not a warning. It's not an issue. It's not a big deal because again, like it's just the two moving averages like moving apart and then moving closer together. So the fact that they're moving closer together isn't a big deal, but we get valuable information on the next rally attempt. So then AMD tries to bounce off the 21, which is the orange line, and during that bounce, notice that the MACD cannot cross its moving average. Okay, I call this a kiss. Okay, because the MACD goes up and kisses that line. To me, that tells you we're either going to have a trend change. In this case, it's a trend change. In other cases, it could be a continuation of a trend. Okay, so just to kind of review, we got to move down and then a move up, and then during the move down, we got to cross, and then during the move up, we have a failure to cross. We have a kiss here and then a continuation down. Okay, so AMD is trying to rally. The MACD is saying, nope, not going to happen. Okay, because the MACD is like a momentum or trending indicator, and the fact that it wouldn't cross back up tells us that it is rejecting this attempt to move higher, and it's not going to last. All right, let's look at another example. So here's Freshworks, a little bit of a busier chart, but as you can see here, stock broke, consolidated here, broke out, went up to a high. Then we got a hard move down here. During that hard move down there, we have a cross down there. Then we have a legit rally attempt here, But during the legit rally attempt, the MACD could not cross back up. It just moved up here, kissed, and then fell off. There was a legit rally attempt here, but the MACD kissed and then fell off. Okay, so I use this to gauge, like, is the uptrend going to reassert itself? And in this case, the MACD was telling us, no, this bounce, although it looks really nice, is just simply not going to last. Okay, the bulls could not fully, take control again and push momentum back to the upside. The bears were in control. All right, here is HUT. This chart should look familiar because I showed it just a minute ago with the RSI. Stock moved up, fairly steady and consistent move down. MACD crossed down, no problem. Okay, there are strategies you can use with MACD where it moves up, comes down and tests zero, and then moves up, and that by itself is like an ABC pattern that you can trade off of. So the fact that it crosses down isn't really a big deal. The problem is when the stock tries to rally here and the MACD fails to cross back up. That's a kiss, and that's a warning that the indicator is refusing to match the movement of the underlying stock, and the underlying stock is probably not going to go very far. And as you can see, it broke down, and the MACD distanced itself from the moving average and fell pretty hard. All right, last example with MACD. This is Nvidia again, same chart as before. Whoops. So stock moved out of based here, moved up, really higher high there. We have a couple higher highs there, negative divergence there. So that's a little bit of a warning. It doesn't mean you just jump in and go short or sell everything, but it just kind of warns you that each successive move up doesn't have the same momentum as the one before. So we got a hard move down, no problem. Stock is really strong, so it's a hard move down. MACD crossed. Then as I showed a few minutes ago, we got a double bottom and then another attempt to rally. But during the rally attempt, momentum could not shift back to favor the bulls. Okay, it's very simple. It's like momentum's up, and then this was enough. This right here was enough of a move down to shift the momentum to slightly favor the bears, and then it was an attempt to reassert the uptrend, but the MACD said nope, probably not going to happen. Bulls were not able to fully take control. All right, let's go to stochastic now. Now, as I said, MACD is a momentum, like trending indicator. Like it's the trend. Stochastic, the way I use it is as like a timing mechanism within the trend. Okay, the parameters I use here are 5.3. I think most stock trading platforms use like 14.3. I use 5.3 again because somebody introduced it to me and it seemed to work, so I just stuck with it. The highs and lows here match up pretty well, so they kind of give you an idea. They help with timing trades. That's the biggest point I want to make. Like the high here and the cross down is close to that, and this is close to that, and the low here and the low here is close to that, and that. And the reason why that's important is because if say the stock moves up and is consolidating sideways, and you think it's going to break out, and you're wondering, well, where should I buy? Should I buy that black candle there? There's a black candle in an inside day. Should I buy that one? Like, where should I buy? And as a timing mechanism, the stochastic helps time it. So the stochastic actually crossed right on this day right there. So if you waited till the stochastic was either crossing or pretty close to crossing, then instead of getting chopped up in here, you waited a little bit longer till you got confirmation, and then you got in at a better time. Now, in this case, it didn't work out very well, but you get the point, is that like the high here matched up with the beginning of this consolidation pattern. The low here matched up with a pretty good buying time right there. So again, the MACD is the trend, and then the stochastic is used as a trend, as like a timing mechanism within the trend. All right, here's Mara. Go through this quickly, and then we'll put it all together. We'll put all three indicators on the same charts to see how it all plays out. So again, I probably don't even need to go through this. It's just that the high, high, low, low, they all match up pretty well. Like low here, high, high. This low is right there. This little nugget there is this double bottom. So they match up pretty well. So it tells you, in this type of a consolidation pattern, it tells you buy here, which is like there, rather than buying over there. All right, let's put all three indicators on each chart, and now I'll actually show you how I approach the market and how I use all three together. All right, so here's Beyond with RSI 12, MACD 12.26.9, and Stochastic 5.3. So what we have here is we have a stock that moves up, consolidates in a downtrend for about like six or so weeks, breaks out to the upside, and then trends higher. And then we have what looks like a move up, a move down, and then a move up. And the question is, are we going to get a consolidation pattern here at the high, which is going to resolve up, or is this going to be a double top? So we're going to look at our indicators to help give us some clues. So first of all, we have, let's draw, I like drawing trend lines on the RSI. They give little hints. So what happens here during the move down, so that the stock moved up, then it moved down. During the move down, the RSI crossed, and then it fell out of overbought territory, which is perfectly fine. The MACD crossed down, and the stochastic was already trending lower. Then there was this bounce attempt back to the high, not only back to the high, but it actually printed a high. And what we got here is the RSI flagged. Okay, it kind of moved up, but not with a whole lot of force. That flagged. The MACD failed to cross back up, and the stochastic simply cycled up and then crossed back down. Okay, so I got a kiss here, across here, and then this breaks down, and that tells us this is going to be a double top. Stock's not gonna rest here and consolidate and move higher. It is going to double top and move down, and that's exactly what happened. And to further the point I've said earlier that the MACD is the trend, so as long as the black line is trending down below the red line, that trend is down. And then the stochastic ends up being a timing mechanism within the trend. If you're wondering where should I short within here? This is the trend. This becomes your timing mechanism. You go short when you get a cross down. Okay, this is the daily chart. Let's go to another example. So here's Celsius. Stock based, broke out in a big way, ran up huge. Okay, so first thing that jumps out at me, we got higher high here, lower high there. So we have a negative divergence. Then the stock drops here, which is no big deal. The stock deserves to do some backing and filling after such a big run up. When it drops, we get the RSI first crosses the trend line, and then it breaks down from overbought. The MACD breaks down, and the stochastic was already trending lower. Okay, that's all normal stuff, not a huge warning. Okay, stops are used on the price chart, not on the indicators. Then you have a rally attempt. Okay, but during the rally attempt, the RSI simply flags here. Okay, it doesn't get back up in overbought territory. It just flags. The MACD fails to cross back up, and we have a cross here. Okay, so I got a kiss here, I got a cross here. This breaks down from a flag pattern, and it falls from there. Okay, and as I've said, this is the trend. This is your timing mechanism within the trend. Okay, so if you're wondering where in here do I short, this helps you identify from a timing standpoint. Okay, same thing over here. We get another kiss there. And there's your, as the trend continues to be down, here is another short. And then here's another short. MACD is your trend. Stochastic is your timing mechanism within the trend. All right, another example, here's Dell. Okay, big rounded bowl pattern, then it surges. You can see that. Okay, then we have a pretty hard move down here. This is a 60-minute chart. Okay, so when we move down there, we have This breaks down both. It breaks the trend line and it breaks below 70. Okay, MACD crosses down, stochastic already moving down. Then there's this rally attempt here, and during that rally attempt, the RSI flags. MACD kisses here, stochastic crosses here. Okay, so everything lines up. We got a kiss over here, we got a cross here, RSI breaks down from an RSI, and you can see Dell continues down. Okay, so if you're wondering, is Dell gonna move up, flag, and then move up again? The indicators tell us, the indicators are basically rejecting that kind of a scenario. The indicators are telling us the stock is not going to go that high. It could do a double top, it could take out its high by a small amount, but the fact that the RSI simply flags here instead of moving up rejects the price. The fact that the MACD couldn't cross back up, and then while the trend is down here, there's your timing mechanism to go short. All right, let's look at another one. And I'm just going to keep looking at examples until, I got about 5 more minutes to go. So I'm going to keep looking at examples, and then I'll wrap up with about a minute to go. So here's HUT. It is a 2-hour chart. Stock moves up, moves over, moves up to a new high. Everything looking really, really good. Now we got a pretty consistent and steady move down. You've seen this chart at least once, probably twice by now. So stock moves out of an oversold RSI reading. MACD crosses down. Stochastic already crosses down, had already crossed down. Then we have a legit rally attempt where the stock nearly made it back to its high. But during that time, the RSI simply flagged. Okay, it could not get back up into overbought territory. The MACD never crossed back up. We got a little double top with the stochastic, and that crossed it down. So we got a kiss over here, a cross here, and then this falls out of a little flag pattern which had refused to go up and confirm the price. So we knew that this attempt to move up was going to get rejected. We were going to get a double top. We were not going to get a consolidation pattern that led to an eventual breakout, and down she went. Here is Palantir. Okay, stock was kind of falling and basing, jumped, nice earnings news, little pattern here like ascending triangle. Things were looking decent on a chart pattern standpoint, but this move down here, which is pretty normal, stock went straight up, so it deserves to do some backing and filling. During that time, fell out of an overbought territory there, crossed down there, and stochastic was already pointing down. Then we had this attempt to rally there. Okay, but during that attempt to rally, RSI flagged. It never, even though there's a very obvious higher high here, the RSI never got back up above 70. It flagged instead. We got a kiss here and another kiss here. We got a cross here and another cross here. So stock moved up, moved down. That move down right here did enough damage that this move here was not enough to, to rescue. I don't know what the right word is off the top of my head. It was not enough. It was not enough to get the indicators to start looking more positive. So as you can see, RSI flagged, and you got 2 kisses from the MACD. You got 2 crosses from the stochastic. It eventually the stock fell. All right, so I'm going to wrap up here. I think you guys get the gist of it. This is how I operate. I don't expect you to do the exact same thing. If you're relatively new, maybe this gives you some sort of platform to start with. If you've been trading for a while but can't get over the hump, maybe there's one little usage that I use that will actually get you over the hump. Okay, this is just how I operate. There's lots of ways to trade, lots of indicators, lots of parameters on the indicators, lots of ways to use them. You don't have to use them just like me. But I can tell you that all the best traders, all the most successful traders find a simple setup that works for them, and they study it and they practice it and they get good at it, and they just do that one setup over and over and over. So hopefully, I don't expect you to buy into everything I said here today, but if there's just 1 or 2 nuggets in here that you could grab onto, then I would consider this well worth my time and a successful talk. So I'll be back in a month. to talk about managing trades once you're in them. So until then, if you want to reach out to me, there's my email address, or you can find me on Twitter. And with that, I will throw it back over to the Money Show.